Welcome to the day Tradestor with another day of swing trading. So looking at the S&P $500 today, you can see we're currently at $6,609. We definitely are dropped down into the zone that I set up yesterday. The second zone that I set up yesterday, we're going to go ahead and reduce this down because these lower prices are part of a lower zone. So we're just going to right click in here or left click in here and drag this corner up to capture the majority of these candlesticks. And we'll bring it up to the bottom of this candle, just to make a smaller zone, because we have another zone of consolidation, which is right here. Counting these, we'll just say 6 candles here. So if price falls through this zone, then we have a secondary zone of which we might have price bounce off of because we'll have support. And then if it falls through here, we're likely going to have a support zone around the 63.75 area. Let's go ahead and extend this out and bring this all the way out to our current candle, and we'll leave that there. Drop it down to there. There we go. Now, price initially fell pre-market, but since the market has opened, we've climbed back up from, we'll just say 65.68, back up to 66.11. So we'll just call that a $40 gain again, back on from what we dropped earlier. And this bounce back up might be short-lived as well, because we have the MACD. We have the MACD line in a downward slope, getting ready to cross below the signal line. We also have the RSI trending downward at this point. But since this is a daily candle, if this candle continues to turn green, the average of these will probably level out for tomorrow's charts. The price moving up is probably based on the good information that the jobs list numbers weren't as bad as people were expecting. There were less jobless claims last month, which is good for the market. So given that we had, so far, we're on our third day of a downward move, we do have a pretty large list of stocks that we received possible sell alerts for. And the first one we're going to look at is Bank of America, BAC. All right, I received a price alert given the move earlier, but price has recovered on that. So we will move off of that and go take a look at the IWM, which is an ETF for the Russell 2000. The Russell 2000 is an ETF comprised of the largest 2,000 small caps companies in the United States. Now, the problem with the Russell 2000 is roughly 30 to 40% of the companies are unprofitable. All right, so we had a move yesterday of price moving below our fast moving average. Then we have a continuation of that move. Even though we have a green candle moving up, we are significantly lower than the close of this candle. So we're going to look to see if we're able to sell any of our current shares. We currently have 4. I'm maxed out with 4, which is 1 share per book. And I bought 3 of them at 200, just a little over 231. So we will be able to sell 1 share coming into our active trader. Now we're going to come down to our sell column and we're going to sell 1 share. Price already dropped lower. Oh, then it rose back up. So we sold 1 share at 239. We're just going to say that and also round down our purchase price, which is 231. So we're looking at an $8 profit on the sell of that 1 share. Our next stock on the list is Google, G-O-O-G, which is currently known as Alphabet. Hey, this chart is similar to IWM. Yesterday we had our price move below our fast moving average. We do have a continuation of that move. Again, even though it's a green candle, we are significantly lower than the close of yesterday's candle. And I currently have 8 shares, which is 2 shares per book. So we'll be able to sell 1 book of 2 shares at 246. We'll set it at 246.09. Sold at 246.09, and I bought 2 shares at 230.20. So we'll call that a $16 profit per share. So that's $32 of profit on the sell of those 2 Google shares. And our next stock is Goldman Sachs, which is GS. At Goldman Sachs, we currently have 4 shares, so we're maxed out at 1 share per book. We had price move down yesterday, again, across our fast-moving average. We did have continuation of the move when at open, but price is currently risen, and price is currently above the close of yesterday's candle. And when we have a situation like this, we do not sell. But what we will do is we will keep in our notes, we'll track this throughout the day, and if price turns around and continues its return back downward, then we'll go ahead and sell a share of Goldman Sachs at that point, and I would be selling at a profit. The most expensive share that I've purchased is sitting at, we'll just say $770, but hopefully price keeps going up. Hopefully the low jobs numbers is good news for the market, and we'll reverse this 2-day downward trend. Or if you count the opening today, a 3-day downward trend. All right, so we'll move on to Keysight Technologies, which is KEYS. Okay, now here's definitely, we have the move yesterday, crossing below our fast-moving average. Not only do we have a continuation of the opening gap down, price is moving down as well. So we're going to be looking to sell a keys. We're currently maxed out at 4, 1 share per book. Now I do have 1 share that we purchased that is higher than the current price, but we did buy 2 at 160. We'll just round it to 168. So we're going to look to sell 1 share, drop this down in our active trader, drop back down to 171.73 in our sell column. And it did not go, so we're going to move this down to 171.71. So we made 171.71, buying the share at roughly 168. We'll call that a $4 profit on that sell. Natera is our next stock, NTRA. All right, Natera, now we sold yesterday. We had a continuation move of the cross 2 days ago of price moving below our fast moving average. We have a continuation right now of price from the cross yesterday below the slow moving average. Our open gapped significantly lower. We ended up coming up higher past the close of yesterday's candle, but price is now dropping. So we are going to look to see if we're able to sell anything at a profit on Natera. Out of the 6 shares we own, I do have 2 shares that I'm able to sell at a profit. We bought those at 161.39, so we're going to bump this up to 2. We're looking to sell at 163.60. And if those sell, we'll just round that up to $2. So cancel that order. We're dropping back down to 163.58. So from 163.58 to the Natera at 161.39. As I said, we'll just call that $2 a share. So that's $4 in profit today on that. And every little bit makes us feel all right. So the next one is Roku. Same thing, we had price cross below our fast moving average yesterday. We have a continuation in price opening much lower, although again, we're on a green candle with price moving up. But because we are lower than the close of our candle currently while we're going through this video and making this, we will hopefully be able to sell some of the shares at a profit. Now, I'm currently maxed out with Roku. I have 2 shares per book, so a total of 8. So current price is $97.76. And I will be able to sell 2 shares. We're currently already at 2 in our active trader, and I bought those at $93.88. So we're looking to sell here at $97.68. All right, we'll just round the from 93 to 97. We'll say that's $4 for 2 shares, so that's $8 in profit for the sell of those 2 shares of Roku. All right, SPXL, which is a triple levered ETF, indexing the S&P 500, not SPKL, SPXL, SPXL, And there we go. We're back in. So we did, again, we're having all these crosses are from yesterday with price moving below our fast moving average. And so far, all but the first stock that we looked at, which was Bank of America, is a large candle crossing below our fast moving average, with the opening of today's candle for each stock has been significantly lower. And all of them but one has had a green candle with price moving back up from a low point in which it reached prior or after the open. But since we currently have price, even though it's on a green candle, significantly lower than the close of yesterday's candle, we're going to hopefully be able to sell some shares. We currently are sitting at 12. I am maxed out. That would be 3 shares per book. So for the 4 books, we have a total of 12 shares, and I did purchase all of the shares that I purchased are currently lower than the current price right now. So we will be selling 3 shares at a profit. We'll drop this down to 204, well, 92. See if we get that. And we did 204.92, and I sold shares that I purchased. We'll just say 193. So 193 to 204 is $11 for the 3 shares. So it's $33 in profit. And the next stock that we're going to look at is another ETF, and this is for financials, which is XLF. Now we had price move below our fast moving average 2 days ago. I sold 6 shares yesterday. We sold 1 book on this price confirmation of this cross. Then yesterday we had price move below our slow moving average, which sent another alert to possibly sell. And we do have continuation of the price moving below our slow moving average today. Not only that, we had price open up around 53, drop down to 53.36, run all the way up to 53.71, and now we're back down. Now for XLF, if you take a look at this limit order I already have, it's set for 6 shares. So I max out at 24 shares, which is 6 shares per book. So I will be setting a sell order for 6 shares, and we're looking to sell at 53.50. And the shares that I just sold at 53.50, I bought shares at 53.38. We'll just round that up to 40, so that's 10 cents per share. So we'll say 60 cents profit on those 6 shares being sold. And for rough accounting purposes today, we'll just round that up to $1. So far we're looking at $90 in realized gains on the sales of our shares so far today. If this is your first time seeing my videos, the purpose of my videos is to show you a swing trading strategy, which is we buy when the fast moving average crosses the slow moving average, and we look to sell when we have price moving towards and below our fast moving average or slow moving average, or when the fast moving average crosses below our slow moving average. If you are watching this for the first time, as we move through the charts, take a look at when we have our fast moving average, when it crosses the slow moving average, and take a look at when it crosses back below the slow moving average. There's usually several days, several weeks, even a month or 2, if not more. So the purpose of swing trading is buying hopefully at a good upward trend when we have a cross, and selling when we start to move in a downward trend. Therefore, capitalizing on holding the stock for however long we would have been holding it and selling it at a profit. So you can see if we had bought back here, we sold here, would have been a profit. And since we did buy it back here, you can see we previously owned 12 shares, and this is from a transfer of account. This was a new account that I opened on August 19th. And we transferred all of the funds and assets from our old account to this new account. And then the next day, I ended up buying 12 more. And these bubbles, these red are sells, these green are purchases, and these represent my day trades that I participate or that I use to improve my gains on a daily basis. And if you're watching my videos, I'm showing you my swing trading strategy. And we just sold some shares at a profit. And what I'm showing you is not a get rich quick. This isn't something that you come in every day and take a look at and move, purchase and buy, or buy and sell stocks. I'm trying to show that you can make money over time. This is for people who want to make money over 10, 20, 30 years. This is in preparation so you can retire. So even though the 6 shares that I sold of XLF today was only 60 cents, that's either 60 cents coming into this account to where we could buy stocks that are actually going up today, or if we're not able to buy anything today and this continues its move down, it's money that we've got in our account that is no longer in a downward trend. And thus we're protecting our gains. So we're going to take a look at another ETF, which is XLY, and that is consumer discretionary. Again, we had price move below our fast moving average. Yesterday, however, we did not have continuation. We had price open higher than the previous day's close, but we do have continuation now of this move. Not only do we have continuation of the price of this move across our fast moving average, we currently have price lower than our slow moving average. So by the end of the day, will it close lower? Will it close higher than our slow moving average? If it closes higher than our slow moving average, we will not receive a buy alert or a possible sell alert tomorrow on this price move. The alerts are based on the close of the price at the end of the day. But we do have confirmation of this original move across the fast moving average 2 days ago. I currently have 4 shares, and for XLY, I maxed out with 1 share per book. Current price is $236, which is higher than my purchase prices of 2 of the shares. I currently have 1 sitting in a sell order right now. So we will be selling 1 share of XLY. We'll see if we get it at 236.86. We did not. It was already moved. So 236.85. Looking to sell. So 236.85. And we just sold XLY that we purchased at 233. So that's $3 of gains. And we have another ETF, which is XTL. And just like many of the others, most of the other stocks that we looked at today, we had price cross below our fast moving average yesterday. We do have a continuation of that move with price currently being lower than the close of yesterday's candle. At one time, we did have price move below our slow moving average, but as you can see, it's risen back up above the slow moving average. Again, if price moves down and the candle closes where price is lower than the slow moving average, then tomorrow we'll receive a possible sell alert on this move down, if indeed it does make that move. But for now, we're looking to sell XTL. I max out with 8 shares. That's 2 shares per book. So we're going to bump this up to 2. We're looking to sell at 138.28. Nothing is happening. We'll cancel that. We'll drop that down to 138.26. We'll go 1 more to 138.24. And now we'll just give that up and we'll go to market. And we sold at 138.23. And the 2 shares that I just sold, we bought at 126. So that's $12 of gains per share. So that's $24 in profit on the sell of that book. And our last one is another ETF. It's UDOW, and this is an ETF that is indexing the Dow Jones Industrial Average. Again, a familiar sight. We have large candle moving down and below our fast moving average with price opening significantly lower than the close of the candle. I'm currently maxed out at 8 shares. That's 2 shares per book. So we're looking to keep this sitting at 2. And I currently have 2 shares that we bought at $99. So we're looking to sell at 104.88. Did you see that price jump? It was down here and it jumped up 20 cents, but it did not sell. So we'll try 104.84. That's not going. So we're just going to sell market. Sell market, when we hit that, it moves. It typically might sell faster in some cases. The sell market order is supposed to take the difference between what the least expensive selling price is and the most expensive purchase price is, both the selling price being that of somebody who's trying to sell the stock and the asking price being that of somebody who's trying to buy the stock. And the correct terms would be for the bid and the ask. So when we go in to sell market, it's supposed to take the midpoint between the bid of the prospective buyer and the ask of the prospective seller. And depending on the stock or the velocity that price is moving, that can be a huge gap. In some cases, it could be 2 cents. Some cases, it could be 4. Some cases, it could be $1, $2, $5, depending on the value of the stock. Which is why I typically come in here and I try to ask for a specific price first. Because if I choose to go with sell market, I might lose several pennies, might lose several dollars. Again, that would be dependent on the value of the stock and the gap of the difference between the bid and the ask prices. Like here is an example. We have a bid and an ask. The price difference is only $2. It's fluctuating between, 2 cents and 3 cents, not dollars. 2 cents and 3 cents. So we have the bid and the ask. That is visible on each chart for every stock that we pull up. As an example, I'll pull up, what is a good stock I have that sometimes might have a $4 or $5? MPWR, which is monolithic power. You'll see we have a bid of $889.82. Somebody's looking to buy that, and that's how much that's the most they want to spend. But the seller, they only want to sell at $896.91. So a price of a stock is dependent on how much a seller and a buyer agree to make that exchange. Right now, the current value of the stock is at $893.38. So until somebody is willing to sell a stock at a higher price and somebody's willing to buy it at a lower price, this price won't move. Although I said that backwards. The price won't move until a seller is willing to sell it at a lower price or a buyer is willing to buy it at a higher price. I said that inverse the first time. So we're looking at a $3 difference. So if I really wanted to buy this stock and I wanted to buy it now and I didn't want to wait for the a specific seller to sell that to me, I'll just hit sell market, and more than likely I would get that around $897.50 or so. But we have one more stock to look at. I said I was going to take a look at Bank of America, and this will complete our list. So Bank of America, not only is it still higher, it's gone even higher from when we first looked at it, I believe. So we're not going to be doing anything with Bank of America. We're going to go back to our S&P 500 chart, SPX, and we'll take another look and see where we are. Price is moving higher. It looks like it might. So here, let's zoom in. Now the top of this zone, and this is just a rough zone, but it's possible that price might move up, hit this zone or hit the fast moving average. If it does move that much today, that would be amazing. But top of a zone, wherever a zone might be, could be a point of resistance. So price sometimes rises up to where you think that the zone might be and could either be barely beneath it or a little bit above it, and then turn around and start to go back down for the rest of the day to continue a much more deeper downward trend. And if you can see I tried to put the zone at the top of the highest point of this particular day, which was September 17th. And also let's zoom in. So that was we had a price move past the zone, turned back around, it bounced off. So we split the difference between these three candles. Zoom in even more. So this is a pretty good zone. Top, it's a little bit better than the bottom of the zone. Okay, so we sold some in our day trading strategy. We sold some Union Pacific. At any rate, we have price bouncing down from this particular area, which is sitting around 66.21.61 on the S&P 500. So it's possible that we might possibly see a $4 raise in price, and it might just bounce off of that and turn back around. And that is the daily struggle between the bears and the bulls. Bears want to take it down and the bulls want to push it back up. And there are specific areas, there are specific price points that act as both support and resistance. All right, now I'm not going to place any sell orders on video. I'll do those off video, and that'll be in our sell orders list at the end of the video. That way, if you've made any similar purchases when I made mine, then you'll receive the update for the sell orders. But for now, we are going to move into our buy alerts. And really, the only one for today that we received is for TJX. So we have a cross yesterday of price moving above the fast moving average, which sent us a sell alert. And we do have price continuation today. Now I currently have 6 shares, and for TJX I like to max out at 8, so we're going to purchase 2 more additional shares. So we're going to come over here into our watch list, because right now it is after hours and I can't use the active trader. I have to manually input. So we're going to right click in our watch list. We're looking to buy 2 shares. And the current price says it's $141.84. Good till cancel extended hours. Confirm and send. And there we have $141.50. All right, now another stock that we're going to look at. Now this is an old one that crossed the slow moving average last week. We just haven't had enough money to buy in, but we certainly have price continuation. It's moving strong, and especially if we have the tech stocks moving down over the next several days. If we have a continuation in that move, then Yum will end up doing well. But you can see, unfortunately, when Yum moves up, it tends to drop pretty quickly. So this is a choppy stock. It's an if possible maybe stock, meaning if we buy in, maybe we'll make money before it drops too quickly. But historically, that does not prove to be the case. But I'm still willing to invest in Yum, which we will do. I currently have 0 shares. I like to max out at 4 shares, so that would be 1 share per book. So we'll head on over to our watch list, scroll down to Yum, right click, and we're looking to buy, and we're going to buy 4 shares of Yum. It says the current price is $151.04. But we're going to drop that down $1 to $150.04. Good till cancel, extended hours, confirm and send. And it did not go, so we will just slowly move this up until it sells, because sometimes the price on the order ticket is higher than what it's actually currently selling for. And if so, we want to take advantage and just save a few pennies, so we'll move that up to $150.80. And there we go. We saved, we'll just say 25 cents, rounded up to that. And that would be per share, so we saved $1. Now, another one that we're going to look at is Interactive Brokers, which is IBKR. Now, this was just recently added to the S&P 500, and I did at one time purchase all 16 shares, which would be 4 shares per book. And you can see that I did a little bit of day trading with some of the shares, and I made a little bit of money. And then we had price fall big time, so I ended up getting scared because price was still below the slow moving average. And typically I do not buy stocks when the fast moving average is below the slow moving average. However, since Interactive Brokers was just recently added to the S&P 500 on this particular day, I bought in because there's typically an uptrend bias for stocks once they've been added to the S&P 500. So we do have price below yesterday's open, but we are above yesterday's close, and we're going to count this as a continuation of this cross of the fast moving average above the slow moving average. Now, when we actually had the cross, I did not have enough money to buy in and purchase at full shares of 16, but I believe I have enough money now where I will purchase 16 shares of IBKR. So we'll scroll up to IBKR, right click, we're going to buy 16 shares, And we're going to set this at 63.98 and do the same thing that we did before and see if we can get it at a little less. Typically after hours prices are a little bit higher listed than what they actually are selling for. So we'll move this up, try to do 64.42. Move this up to 64.59. I'll move this up to 64.70. Okay, it doesn't seem to be working. 64.80. Right, 64.88. All right, 64.96. And we bought it at the current listed price of 64.97. So we have our 16 shares of IBKR. And this is a good candle for today since the majority of the market was going down. Let's take a look at, we'll take a look, market watch, S&P 500. You can see there's a little bit more red. Now the darker red means it didn't go down that much, and the brighter the red, the more it went down. And the same is true with the green. The darker the green, the less the move. The brighter the green, the more the move. So you can see that there's far more red in the S&P 500 stocks. But given that IBKR went up, that's actually a pretty good sign. So I have no problem purchasing when the market is going down, when other stocks are going up. So we'll go back to our charts. All right, and there we go, our after hours purchase of 16 shares of IBKR. So that is all of the buy alerts that we're able to actually follow through on. The others that I looked at, they're all in a downward trend. They're no longer in an upward trend. So we're going to go back to our S&P 500 chart, which is SPX. And you'll see we closed at $6,604.72. So we had a nice bounce back today from this morning's jobless numbers, that there's less people claiming unemployment. There's less people looking for jobs that aren't able to find one. All right, so let's take a look today and see what our actions actually ended up being. So we sold IWM, Google, Keysight Technologies, Natera, Roku, and 4 ETFs, which is SPXL, XLF, XLY, XTL. Now we did create sell orders to either sell one or all of the stocks. So if you did make some purchases when I made mine, those are on VST, Zoom, and CrowdStrike rather. And we bought TJX, Yum Brands, and IBKR for Interactive Brokers. So that is our list of all of our actions that we took today. Oops, didn't want to close that one. We are opening day trading. So now we're going to take a look and see what our profits were for today. Oh, I almost forgot. I want to look at our chart of the day. Yesterday was the first day I actually started speaking on our chart of the day. So let's pull up Intel again. So our chart of the day is Intel INTC. It was the chart of the day yesterday, and we want to look at our 2-minute chart, 1 day, 1 minute, and we're going to bump this up to our 2-minute time frame. And the reason I do that is that's what I day trade on, and then we're going to zoom in. So for 2 days in a row, Intel has gained over 14%. They gained over 7% today and roughly 6.5% yesterday. And just like yesterday, in after hours, they continued going up on an uptrend. So they have gained from the close from $33.95 to $34.42, so roughly 45 cents. Now, a 14 to 15% gain in 2 days, that is huge. That's a beautiful, nice, quick run up. And you can see the same thing on the 2-minute chart. When we have a price cross of the fast-moving average over the slow-moving average, we're looking and hoping that it runs for some time. So here we went from 9:30 to 10:30 before it crossed back down, and then it was choppy for a bit, and then we have another cross where it went up for a good period of time. And when I day trade, this is what I day trade. I day trade on, hopefully, that some of these crosses that I purchase on are going to be for a good move. So at this point in time, we're going to go back to our day Tradestor chart for our daily candlesticks, which is the 3-month and 1 day. And you can see that they've gone up almost $10 since September 17th. Now, the reason I'm not currently in Intel is on the monthly chart, we have our fast-moving average is below our slow-moving average, but I believe I'm going to do something that I normally don't do, and I'm just going to go ahead and buy some Intel stock. And yesterday, when I spoke about our Intel chart of the day, I did mention that if Intel continued up, I was going to buy in. So it's sort of a, fear of missing out, kind of a FOMO deal here. And Intel is moving up for 2 reasons. One, Donald Trump required that the United States government, thus the United States citizen, become a 10% owner in Intel. So the government has shares, and NVIDIA has said that they are going to be a $5 billion investment. So NVIDIA now also has a partnership with Intel for them to build some of their chips, both for data centers and for Intel's computers. So we have one more stock that we're going to buy, and I'm glad I remembered the chart of the day and it being Intel. So we're going to go into our watch list, right click, and we're going to buy. And now for Intel, I currently have no shares. Again, that's because the fast moving average is below the slow moving average on our monthly chart. But I like to max out my Intel at, let's see, 24 shares. So 33, we'll round that up to 34 times 10, that's 340. So that'd be 680. So plus another 150. So we're looking at less than 1,000, and I've got $2,000 now. So we're going to purchase 24 shares. And we're going to drop this down to $34. Well, we'll just go ahead and leave it alone. We'll purchase at $34.41 if it does go, and it did. So we've got our 24 shares that we purchased at $34.41, even though it shows $33.99. Partly because I didn't want to make the video longer than it has to be, and every second counts because I'm already at almost 40 minutes. All right, so now we will go back to our regular day chart, go back to our SPY, SPX, and now we'll take a look at our actual realized gains and our portfolio performance to date. All right, for today, our realized gains, according to Charles Schwab, is $33.67. But remember that we did sell roughly $117 worth of shares. That was our realized gains in the stocks that I accounted for. We sold at a profit, where Charles Schwab, again, if you haven't seen my videos before, Charles Schwab takes the last stock purchased and says that's the first thing that goes out when we sell. So any stock that I had purchased at a higher price than the current selling price, like today, Charles Schwab automatically counts those as those stocks that are being sold, so it registers as a loss. But for my accounting, we only sell stocks at a profit, and we sold stocks that gave us $117 and realized gains. So we're closer to $150 of gains for the day. Now, our portfolio balance for the day, we're looking at 6.06% performance compared to the S&P 500 at 3.68. And I opened this account on August 19th and started trading on August 20th. And all the funds that are in the new account came from the old account, which when we last stopped on August 18th, it was performing at 16.26% compared to 10.54. So combining both accounts, we're looking at a total performance of 22.32% for my account compared to the S&P 500 at 14.22%, which is 8.1% better that we are performing, or that I am performing better than the S&P 500. Now, it's a little dip from yesterday. Yesterday, we were performing about 8.5% better. So we're looking at 0.4% drop in today. Now, if you've been watching my videos, I'm going to go ahead and close these out. Now, if you've been watching my videos, you will have seen that on some days I make a good deal of money from my day trading strategy, but today I barely had anything that we day traded. Most of the money that we made today, the realized gains, are from selling stocks within our day trading strategy. Now, I'm going to make a note, unlike yesterday. Yesterday I said that I was going to take a look at Intel, and I'm glad I didn't forget. We bought in, so I'm excited to see how Intel performs for tomorrow and on into the next weeks, and especially the next months as AI continues to develop. So if you're watching my videos, I hope you're learning something. I hope I'm actually able to teach you something from how I perform my strategy for swing trading. If you've been unprofitable as a day trader, maybe you'll consider reducing your day trading activities and start taking up swing trading. Remember, well over 90%, it's close to 95% of all people who try to take up day trading, they blow up their accounts, they fail, they lose money. But one of the ways I protect my assets, and another way you can protect your assets, is by doing the same thing that I do. We buy stocks when we have a cross, and I'm purchasing majority of my stocks from the S&P 500, so they're good quality companies. And then when we have a cross of the fast-moving average going below the slow-moving average, we try to sell stocks at a profit. Any stocks that we're not able to sell at a profit, we put a sell order on, and we just hold those until we're able to sell those at a profit. Because this strategy is not a short-term, get-rich-quick. This is a long-term, preferably for you if you're watching the videos, preferably a retirement plan. So as I said earlier, I hope that I'm showing you clearly how my plan works, how I implement my plan, how I sell and buy stocks at a profit. Hopefully that will inspire you to either change your trading behaviors or enter the markets and open your own account and to begin your retirement journey. But with that, we have another day down, and I hope you all have an absolute wonderful rest of your Thursday afternoon.